Hi there, this is Bill at Smart Trades on Wednesday, January the 13th, around 4:50 p.m. on the West Coast, and we're going to take a quick look at the Dow. It's possible we're heading into a fifth of a fifth in the Dow in a diagonal triangle. That's a terminal pattern. It's certainly possible that we could go a little bit higher as well, but it's worth noting here that the Dow peak was not confirmed by the S&P or the Nasdaq, and the peak is right at the top of a wedge pattern. And we've seen again and again, although we haven't seen a major top, that when the Dow or any of the indices hit the top of these wedges, they tend to react to it. And in this case, not only are we at the top of the wedge on a hourly or 130-minute chart, but also at the top of a very long-term wedge pattern dating from March of 2009. Here's the S&P cash, also on a 130-minute chart, and you can see the non-confirmation. And additionally, you can see that it's also following that similar wedge rally pattern. And again, this is coming out of a congestion, and we had targeted the 1150, 1160 area out of that congestion, so we are very, very close to that area. And I'll talk a little bit more about that in the charts coming up here, in particular the S&P cash weekly. And two things to note here. One, although we've already surpassed A equals C on the Dow, you have two equivalent legs up at 1159 basis the S&P cash right at 1159. Additionally, there's a monthly resistance around 1166 for the S&P cash. So that combined with the top of this weekly wedge, the hourly wedge, it's an area to watch very carefully. Again, certainly it could go a little higher. 1159 is indeed the ideal target. We'll give it a little more room, but it's time to start looking for a reversal. Here's the Dow futures on a 240-minute chart, 24-hour chart, and again, that wedge pattern is still intact. Volume is fairly good on the upside here, indicating that indeed we may go up and test those upper targets. But again, we're at the top of the wedge, so let's watch it. Here's the Dow weekly chart, and I would bring to your attention the area around 10,750, give or take 10 or 20 points. You've got a whole series of swing highs, swing lows going back into 2005, and that again coincides pretty nicely with that S&P A equals C target. So perhaps a little more rally, but getting very, very close to a critical juncture, both on the S&P and the Dow. Here's gold. I believe that gold may have topped. The 1167 area is a 62% retracement of this downdraft, and from there we've declined a bit. So we have what I'm calling one down. This is possibly a completed wave 2 rally. It could go back up there and test it again. But if indeed gold is topped, and this is the first impulse down in a series, we should see new lows for the move here over the next several days or week or so. The dollar, conversely, I believe has bottomed, and 76.50 would be an ideal target. It's about a 50% retracement. That's the previous fourth wave of one lesser degree. Very corrective looking decline off of the peak just before Christmas. Anything could unfold here, but so far so good. I would be looking for a buy here in the dollar very soon. And finally, X marks the spot for crude oil. Crude oil is getting very close to the top of its wedge, shown here on a weekly chart. The area around 87, maybe 87.50 is the top of the wedge. So I would be looking for a reversal in that area. If it blasts through, all bets are off. But if we go up there and fail around 87, 87.50, I'd be looking to go short crude oil. We could go all the way back down and test the lows of 2009 if indeed this is a corrective rally. The implications are that we have an entire new leg down that should unfold when the correction is complete, which I believe may be just around the corner. Anyway, thank you very much for watching. Have a great evening. Bye-bye.